can see that. So we're going to start off with simple one. Go on to the 5 minute. Yeah. Okay. So what we do first of all, start off on the 4 hour chart and determine where price wants to go. So we can see that price was it was bullish for a while. Now we've broken the structure to the downside because we closed below a previous low. Okay, so this candle's body, this big red one, this one, I need to change this because it's really annoying. Anyways, figure it out later. So this candle closed below the previous low, which was that wick. Yep. So now we know that we've come into a downtrend. Okay. So we're going to be looking for short positions in the market. So what we can do from now is mark out, I think mine's still set wrong, but we go from this point, highest high to the highest low to get, to the lowest low to get your discounted area. Right, then you can get whatever you want. I don't usually do this part, but get your rectangle. I've already got mine marked out. There's your equilibrium. So this is the area that you sort of want to find your short positions in. So you go onto your lower time frame, go onto like your 1 hour chart, identify a price is still moving bearish, still going in a downtrend. Yeah. And yeah, we'll get, that's not for this part. Yeah, carry on. Higher time frame, you've got a fair value gap there, but this is what we want. So we're going to go onto the 5 minute chart, and what we're going to look for is we're going to wait for price to come into our equilibrium, which is this part of the block, the top block. Okay, then we're going to try identify fair value gaps. So there's a fair value gap there, a fair value gap that hasn't been filled. So, pardon me. So we're going to be wanting price to come up back into this area. Yep. Go onto the 3 minute chart, mark it up. Still identifying every little thing you can. So we know now that because we have another fair value gap on the 3 minute chart, it fits into that part exactly. Okay. So what you want to do, you're now on your lower time frame. So this will be, it won't be a massive trade. So this will be quick in and out. So once price comes back up to this area, because price is moving bearish, we're gonna look for an entry. Say we want it in this 50% zone, which is the sort of cheaper price that we can get market at. We're gonna knock a stop loss above previous highs, so it's not going to be a 20 pip stop loss anymore. All we're going to be doing is targeting previous highs. Using our stop loss protected at these or just above them. I've started doing mine a little bit higher than it, sort of 10 pips away. And then usually target a 1 to 3, 1 to 2. But you do have to remember you can't always be hitting these crazy trades where you're going to be risking, let's say you're on a higher sort of leveraged and have high funds in your account. You're not going to be wanting to risk 2 grand on every single trade to be making 10 grand, because realistically it's not really going to happen, in all honesty, because we know that market isn't always going to move in our favor. So what you want to do is when you're targeting all you have to do first of all, mark out your one-to-one position. So there's my one-to-one position. Yeah, and then I'll go back to a 1-to-2. Okay, so this is your day trading. So this is more of your in and out sort of hourly trade. Now, you can risk more on these, but there's a higher chance of these not going through as much as previous ones. So if we go into this, go on to 3 minute. Yeah, that that's really it. So it's genuinely, don't target too much once price comes to 1-to-1. Stop loss is break even. Close your trade. Uh, Let it run to take profit too, or close it when you're happy. Don't target 20 pips. Don't target 30 pips. Target where you're happy, and don't be greedy.